Good morning, guys. Welcome to this Monday, September 15th. And if you haven't, we have rolled to the December expirations for ES and NASDAQ, mini Dow, and so on and so forth. Um, so all rolled, and we have a gap up. So that's why everything looks kind of funny this morning. Big gap up. They gapped up from, as you can tell, they gapped up here from the 65 80s, 90s up to the 66 57 60s. So it's a good that's a good 60-point pop to the upside. So we'll see where they're going to go from here, but that's a pretty big gap. And so we have a couple of options in front of us going into today's trading. Before I get there though, but just don't forget to roll if you have not. The news this morning and this week, before we keep going, we have a couple of things happening with this week. Not much news to drive the market today, though. Empire State at 8:30, that's about it. Tomorrow, though, we get a ton of news. We get retail sales, import-export prices, industrial production, business inventories, housing market. We also get the Fed meeting beginning on Tuesday, and then a Fed announcement on Wednesday. So here's going to be the first rate cut, most likely. That's what I think the big consensus is. Probably quarter point. We'll see how the market reacts to that, but I doubt it's going to be a half a point. It's going to be a quarter point reduction here on tomorrow. That's kind of widely expected. Wednesday also we get housing starts and all report. Thursday we get jobless claim, Philly Fed, manufacturing leading indicators. We have a quadruple witching on Friday. Not much news, but quadruple witching on Friday. So that's what we got going here. So Tuesday, Wednesday, I think are going to be the big news days, especially the announcement on Wednesday. But gap up, we rolled over, we gapped up, and now we are trading the December contract. And that's so far it looks to me like they're trying to take this higher. We started off yesterday, Friday's trading. So closed out pretty good. I'm going to scroll this chart up a little bit. Give me a second. There you go. So Friday's trading was started off um, like a pretty tight range. Nasdaq was doing a little bit better than the ES, but the ES kind of stayed in the range. Pretty much stayed at the highs here, going sideways for most of the trading day. They took it higher for a bit. They took it higher going into the close, and then at the very end here, you can see how they reversed the whole thing right back here to the 6580s. Not a whole lot of range, 6580s up to the like 20 points, but they did reverse that whole day session range right back here to test support at 6580. Though they didn't take it out. For a while there, I thought it's going to be a lot more weakness going into that Friday, but it did not happen, and so we are holding on to the gains. And the gap up, rolling into the next expiration. So the options we have in front of us is really potential gap closure. Not sure it's going to happen. There's always an opportunity for that. Right now, I would say because they do the UA and December they usually trade together, so they may converge here eventually. But sometimes you just get this gap up and they are kind of apart and they don't come together before the old contract expires. So the December contract trading up here at the 6640s, and I would just start from the long side of the market initially. Looking to buy weakness at this point, looks to me like they almost could be a 6650 here buying opportunity. That would be pretty aggressive because it looks like they're just flirting with the highs here. Otherwise, looking to buy against that 6640s, and that's about it. If they starts backing below that 6640s, at that point, we're looking at early weakness and looking for potential pullback for as a buying opportunity. Now, if they trade all the way down here to that 60, below the 6600s, I would probably be more concerned about the short trend. It's still in a gap closure mode at that point, but that would be pretty violent early weakness if that happens. Right? It's a pretty big gap, and I doubt we're going to see a big gap closures. But if I'm wrong, that could be like the short trade of the day, put it that way. That starts happening. But most often, I think at least lately, when I've seen these gaps up like this, they haven't closed during the day session. There've been maybe a probe to the downside, but that's about it. So we're gonna just assume they're gonna stay on that same pattern for now. And if they start trading, staying below the 6640s and start extending past that, and looks like they are closing that gap, I would potentially try a short trade there. But it kind of depends a little bit what it looks like. But yeah, we'll have to see how much early weakness we get. We had the Fed announcement come out this week. That's going to be a big number. So we got some news who potentially can drive the market throughout the week as well. So starting off on the long side, looking to buy weakness. At this point, the only one I'm looking at right now is 6640s. Potential for a gap closure trade if they start retracing past this 6640s. But those are the two options I'm seeing early on. Other than that, probably stay on the long side with a bit of caution. Now, there could be a little bit light on volume as well. We haven't, right now, volume is at 73 or 74,000. Volume is at 46,000. So still rolling volume into the December contract, half in between, I would say. So I would just maybe trade it with a little bit of caution since the volume is going to be on the lighter side, right? So that's the ES to get started, looking at the bonds and the NASDAQ. Bond market first. It's just holding in a range, you know, uh, holding in a range after this move out of the middle at this point. Looked like they did run out of gas. We're in the stage 3 right now, this little profile to the upside. They've also moved out of the middle. They're running up here to this attractor. They failed to extend, and they've been back and forth here a couple of times now. So I think Friday, well, no, sorry, Friday extended. Nope, I almost gonna have to take that back. I would probably say that we are in stage 2 right now. So this Friday extended, or Thursday extended. Friday was the first day we didn't extend. So if they don't extend today, just stay here, then we get to stage 3. But it looks to me very much like we're going to hold here around that 117.16, and yes, repriced the bond market a little bit to the upside. Yields came down a little bit. So I would start off range bound right now. Maybe looking for a little bit more retracement if we are in stage 2. Let's see if they can retest these 117s, 1628s, and 1624s. But that would be a pure stage 2 pullback dynamic. If they can't really pull back that far, then we're probably going to stay in a range going into the close and into tomorrow's trading. So maybe slight bias to the downside to get started, looking to sell against that 117.16s. But it's not very strong. They've been, as you can see, going back most days has been pretty range bound, not a whole lot of directional movements at all. So I would say primarily range bound, slight bias to the downside to get started to see if it's gonna try to pull back further, and if they can't, let's go back range bound on that guy. So I'm going to buy against the 17s, 17 to 702, 1628s, 1624s for rotations back up. We're going to get short against 16s, and then 1728 and 17 or 1804. Probably about 1728. I would start leaning in on the long side again and see if they have what I can take it. The 118s are right in the middle here. Did not put an edge there right now, but that could be like one of those specific numbers they stall at for a second. So we'll see where the bond market's going to go. NASDAQ though, back also at Ray gap up in a big way. And you can see NASDAQ was okay, the whole Nasdaq was a lot stronger on Friday. They made a new high. They took out the 24,050s. They were in the price discovery territory, and then gap up to the December contract. They are definitely heading higher, so they are on fire. And I would just start off looking to buy weakness at this point against that the 24,320s for rotations back up. If they start probing below the 320s, still looking to buy, but I don't have anything to lean against here. So I'm just looking for that probe. If it doesn't hold, if it probes, but it trades right back up, well, we're back up here again. If they can't and start retracing, that's when I would start looking for that potential move to the downside, maybe a gap closure trade. But I mean, it's like this gap closure trade stuff is it has been not very reliable on the indices, I have to say. So they had been more likely to keep going into the upside. And right now it looks like they popped a little bit even. So trading from the long side to get started, and let's see how far they want to take this. All right, so that is the Nasdaq to get started, and as we get a couple of days, we'll get more levels to lean against, and it'll get a little bit more comfortable. But that's where we are. Finally, oil and gold. So gold in a attractor area right now. Looks to me like they finally they settled in around 36.80 here, but going sideways for a bit. Several days now, building value around that 36.80, 36.90, going back and forth. So we have a nice volume edge here at the 36.60s. If that comes out, I would be looking for short opportunities. Below that 36.50 ledge, a little low volume area at 36.45 to 50. Below that 36.50 edge, they take that whole thing out. We may see a good retracement. But on gold, we are range bound. I would favor the long side still. We've been extending quite a bit to the upside, and I'm not sure. It's been a pretty good move, and we'll see when we're going to get a little bit of a pullback here. But we have a lot, see how much range we got there, and it's been on fire. So if you own gold, you've been sitting that's been pretty positive. The reason I'm not too aggressive on gold, at least on the investment side of things, is because they don't give a return. It just sits there, there's no return. It's just a static asset, It'll go up over time for various reasons, but at this point we went from I think 1700 not too far ago. We were below 2000, and then they were up against almost at 4000. So it's a pretty good return lately though. But for a long time, gold was just freaking dead money, just sitting there, not doing anything for you. But right now it is moving. So I would start off range bound on gold right now though. So trading in this range, look to sell against 36.85s, 90s up to the 96, 97s. Looking to buy against support 72, 67, 62, maybe down to that 55 level. Now remember, below that 55, 60, here you have that little volume edge I talked about. If that area comes out, we can start to see more of a retracement. So with the starting off range band right now, we'll see if they're going to try to extend. They'll take out that 96 with a bit of conviction. If they're going to head lower, they'll take out that 55, 50, 55 to support areas with a bit of conviction. And then we are on our way in a direction at that point. So that's gold. Oil, we're rolling in a couple of days to the December contract. Oh no, so we are in October, November contract. We're gonna roll to X25. But as you can see, oil is just going sideways. They've been to the downside, and everything they're doing is to drive prices lower on oil. So there's no reason to think anything else. Over time, this price is going to come down. It's always as they sort out these cross currents and supply demand on oil, as our energy policies start opening up the supply side of things, this is going to keep coming down. I'm not sure they really want prices down in the 20s again, but it's getting it down to the 30, 40s would be pretty welcome. That would that would drop prices on gasoline and everything else pretty substantially. We have pretty much a big tax cut for people, not having to pay for a lot more for energy. Except in California. In California, they'll probably find a way of raising gas prices. Yes, but that's California. We're living the dream over here. Anyway, so starting off range bound on oil, looking to buy weakness, support 62.70s, 62.50s, 62.20s. Looking to sell strength 63.20s, 63.50s, 63.70s up to the 64 evens. So that's your range. Anything above 64, I would start thinking long side. Anything below this area, the 62.20s, I would start thinking short side. Maybe at 61.70, but I think the better edge is at 62.20. So that comes out, I may start thinking about the short side and see how far I can take it on the downside. So, but anyway, right now we're looking to buy weakness, sell strength on oil, trade it as a range-bound market to get started. All right, so that's oil and gold. Back to the ES. And it had a little pop here, like both these and I had a little pop. So we'll see what that's all about. But that's how we get the day started. Gap up for the rollover. Two options. Stand alongside of this to get started. Watch that lower support edge. If that comes out, then this looks like they're starting to retrace. That could be a good reason to trade a long retracement or a short retracement trade down to yesterday's close or Friday's close. But I'm not going to be too aggressive on that part of it because it's the last pattern we've seen has been not very convincing when it comes to gap closure. So eventually they'll close it, but maybe not right from the get-go. Anyway, we'll leave it there. I'll see you back at 11:30 for the next update. So good trading, guys. And I'll see you guys back then.